Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, everyone. Ira Epstein, and here we are now on Monday, and this is the 21st of November, 2011, and like Horatio Alger, I'll look at you and say, look at this market. Market doesn't like the subcommittee. It's really that simple. Here we are late afternoon, in fact, getting on a 3:10 in the afternoon. Still no word except they're working on it. In theory, they do have until midnight to get something done. And you saw the reward that the market gave both parties by accomplishing nothing. Not very good. On the other hand, the markets aren't falling apart. They fell apart early, and it's a little amazing that we didn't expect much out of the super committee, and yet here's the market saying, okay, we wish they would have done something. I don't know where to go with that. The bonds and notes, they act like a labored rally. They just don't have that pizzazz to the upside. You're going nowhere in the yen at this point in time. When you come over to the dollar index and the euro, they're either side of unchanged. So the big action happened in gold, where they took out more premium. Silver, which came back $1 off its low, acted actually pretty good at the end of the day. And copper, which was down hard but couldn't find the area of the 330 zone easy to stay under, and the market popped up a little bit from there. So in looking at the markets, let's go to the chart of the E-mini S&P. And here we are in the month of November, which is rolled over and is coming apart at this point in time. Will we get a Thanksgiving gift? Well, tomorrow's turnaround Tuesday. So I'm going to go out on a limb and say, yeah, I think that with today's action, we could get a rally. Is it a one-day affair? That'll be the problem with the market. There's nothing here that's a trend changer. When I open the chart up wider, you can see that you've broken out of this triangle pattern. So the market's got downside momentum to it. And until it takes out 1229.75, the high of the rally that we had on Friday, which was an inside day, you would say that the market's got a pattern of lower highs and certainly the lower lows that we're going into. Where is that in relation to any key moving averages? Well, it's all happening under the 18-day average of closes, and it's been staying under the 18-day average of closes for 4 or 5 days now without attacking it. That's not a sign of bullishness. That is a sign of still bearishness in the market. You can see that when the market gets over that average, it has a tendency to stay with it. When it gets under it, it has a tendency to stay with it that way too. So even if you were to rally to it now, I'd say still resistance comes in at that 18-day average of closes. I was hoping that we were going to see the 45-day average of closes, which is right here. And if I go back, you can see that it had a pretty good working with it to hold back highs for a while. And I thought it might do better for the lows. But today, you went through it like it didn't exist. So, yes, I'd expect that you can get back to 1204, 1217 on rallies. But I think those will end up being sold. I think that there's now a lot of supply, if you will, over the market. The market's scared, and other than wishful thinking, tell me what's so good out there. We had a shot here to change market thinking. It's really that simple. And that thinking didn't come about in the U.S. We could have done something bold, and maybe we'll eat our words tonight when they come up with a plan before midnight. We'll find out. But if they don't, barring that plan, other than short covering, I don't see where the fundamentals are turning bullish. One of the reasons that I'm thinking tomorrow coincides well with Turnaround Tuesday is today is the first day underneath the Bollinger Band. Now let me take you back here. You don't stay under that Bollinger Band very long, do you? Not at all. So today's the first close, and I can go back quite a ways in time to be over under maybe 4 or 5 months before you do that. So I think that we've exceeded what we had to on the downside. This was a bit of exuberance maybe, and maybe too much of a sell-off in the market coming from where we just did. So we'll see if we get a bounce. A bounce is not a trend change. It's a bounce. You're also oversold at the same time. So in looking at the market, I label it as oversold under the Bollinger Band. You only spend 2.5% of the time under that number. The band can widen, but there's an awful lot of bad in here at 1196, and a lot of traders are going to say because because the S&P didn't stay under 1200, that technicians will say now you've got another failure in the market. Well, there's nothing new about that. We've been failing for a while. All of October was exuberant, lack of it. Now the market pulls back. But where you're going to go with your money becomes the big problem. And if you look at what the U.S. is doing, be it the housing numbers, the unemployment claims, by ourselves, other than our lack of leadership in America, the numbers on their own aren't getting worse. Actually, they're slightly improved. There's slight improvement going on here. So that is something I want you to keep in the back of your mind. Before I go on to the next charts, we're releasing in gradual stages our QT Mobile Center. Now, going along with this, we're also going to have a product that is a lighter type of charting software than we have. It'll work on any type of application, be it Android applications, Apple, be it the PCs themselves, just about anything you can imagine. So this will work with that, and this is built for a smartphone. And then we have another application that's coming out now, and that one will be for people that want a lighter trading application that we have, and I think they'll find that fascinating. Will they do order entry? Yes. Do they have market analysis? Yes. We're putting in it right now, these videos that you're watching. And then for the subscribers to my research, that is going to be in here as well. So you can have your phone, you'll get a text message, you can just read it or watch it right then and there. I think you're going to find this to be absolutely fascinating. The mobile center is yours to try free without my research in it at that point in time. That will come in about a week or so to those of you that want to try that out if you haven't done it in the past. How do you get it? 1-866-973-2077. It's my Thanksgiving gift to all of you. All right, let's go to the market. It is free. Now let's go to the Dow. It's the same thing. The Dow has come down. Now you're under the Bollinger Band. That number's 11,551. You're 11,525. If I roll back here, you don't stay under these bands very long or over them. So therefore, I think that, yes, you can push it, but I think you're going to pop on the other side of the band very, very fast. And I think the same thing's going to happen to the NASDAQ as well. If I turn this way, how often do you see this market staying above or below these black bands? And for those of you that don't know what a Bollinger Band is, there's no magic to it. What it is, it's an algorithm designed to keep the market trading within the band. Now, the band does certain things. Notice how it can widen out and it can narrow in. It just narrowed in, and the fact that it's breaking out to the downside means that the odds of it breaking back out to the upside are extremely, extremely rare. What I look for now is selling on waves as the market tries to rally back for whatever reason the rally may form. But I'm not looking for anything bullish out of it. This is a chart of Brent. Now, if you were watching the Brent crude and you're watching the market break down, I'm taking you back to Thursday. I would be teaching you in my trading course, look for the Bollinger Band as one of the downside targets if you were short. Getting short wasn't easy. You had to be short under 110.30. Your risk was back to 113.61, so you had a $3.30 risk to get short to pick up wherever the Bollinger Band is if you could get down there. Now, this is Friday's action. This is today. You finally hit it. I'd be screaming with both lungs if you were short. Cover shorts, or at least part of them. Move stops way down. See what the market does, but I'm looking for failures at the 110.47 level. This market has accomplished its initial downside. Here's the dollar index. It's not running crazy. The market has got what we call an embedded stochastic. So until, number one, you get under 77, 74, the last break low, and you do have a pattern of higher highs and higher lows, and or the red line of the slow stochastic gets under 80, the trend remains up. Where's the market's first objective? It's still 79.28.5. So from here, it's still another 80 points higher. So I'm still looking for fairly bullish things. This is the copper market. And in the copper, you have finally reached all the way down to the Bollinger Band bottom. And the reason I picked 330 in some of the analysis that I was doing, it's where the Bollinger Band bottom came in. And the market is widening out this bottle. Look at this. See the shape laid on its side? It's a bottle. So it's pushing down the neck. So it's widening it out as the market's oversold. It either absolutely plunges or the market has to gradually grind its way down. The grinding of the gradual way down is probably what the market is going to do. So keep in the back of your mind, today was one of those days where what did we do? We threw in the towel. Now I'm saying we, the marketplace, not me, the marketplace. I'm actually happy to say I've had my clients in terms of market recommendations sidelined for a number of days. Wish I could have caught some of these, but the risk rewards just didn't make any sense, so it's sidelined. This is a chart of the gold-silver ratio, and you're now up to 54 ounces practically of silver that you need to buy an ounce of gold. So while people say, oh, gold hasn't done a really good job, relative to what? If you owned some foreign currency, you might say, I don't know that that's not true. Depends which currency, obviously. If you own silver relative to it, this market has run away on the silver market. So gold has done a fair job, but it is not acting like a market that's going to do you a lot of good right now in a market that sees deflation prices, and that's what we had in commodities today. I'm Ira Epstein. I will talk to you tomorrow.